Hey guys, what is going on? Welcome back to the channel. Again, I want to thank everyone out there for all of your support on the channel. All the viewers, all the subscribers, immensely appreciate the support. Today, I thought I would take a look at a stock that was actually mentioned by one of the viewers on the channel. A stock that has a very large special dividend coming up in the next couple of weeks. And this stock that was proposed as a very good stock for dividend capture swing trading types of strategies. And I kind of want to go through what a special dividend is and why I don't think it's a very good idea to jump into these types of stocks for dividend capture or for swing trading types of activity. So the stock is, as you see up on screen here, CYOU, Changyu.com. This is a Chinese company, as you can see on the bottom here, that is engaged in the development, operation, and licensing of online games. There's a very unique situation with this company currently. The reason that there is a special dividend coming up is that the parent company of this particular company, the largest shareholder of this company, is in somewhat of a difficult financial situation. It needs an infusion of cash. In order to do that, they've authorized Changyu.com here, CYOU, to give a special dividend of $9.40 to each shareholder. So essentially, this is a cash transfer from this company to its parent company. And that's one of the reasons I don't like this for dividend capture swing trading types of activity. You're simply giving back to the shareholders a return of capital. It's not a portion of the company's profits. It's actually part of the company itself. So when this company is adjusted down on the ex-dividend date, and again, remember each dividend, whether it's a special large dividend or a regular dividend, a smaller dividend, will adjust the price of the stock downwards. The stock exchange does that automatically. So for this stock with a $9.40 dividend, this stock will be trading at $20.29 on the ex-dividend date. It is always done that way. And unlike a company that would be expected to kind of creep back up to the price prior to the ex-dividend date, the return of capital really means that this company will no longer have the ability to get back up to $29 or $30. So you don't really expect this company to rebound in its stock price like you would a regular dividend. So that's one of the big reasons I don't like this stock for dividend capture, swing trading types of strategies, types of activity. The other part I don't like is that the ex-dividend date is actually after the record date and payment date. So there are very special rules that kind of go into special dividends. I don't want to get too involved in the discussion. It gets very, very complicated. But essentially, the brokerage accounts, the stock exchanges, I should say, want to avoid some difficulties in different types of orders, specifically stop loss orders and margin calls. In order to do that, they kind of switch up the dates with regards to the stock. So most stocks will have an ex-dividend date, 2 days later the record date, and then sometime thereafter, a month, maybe a couple months, the payment date. But this particular stock here will have a payment date before the ex-dividend date and the record date before the payment date. That is a little bit peculiar. Don't want to go into, again, all of the reasons why that happens, but it's essentially to prevent triggering of stop loss orders and triggering of margin calls for other types of investments on the stock. So that's another reason I don't like it. Essentially, the stock exchange is trying to dissuade investors from jumping into the stock to do dividend capture and swing trades on the stock, playing around with the ex-dividend date and the payment date of the dividend. So for that reason, I don't like the stock either. So it's a return of capital, and it's also a type of stock that has its ex-dividend date, record date, and payment date switched up in order to prevent investors, or at least dissuade investors from jumping into these stocks in the dividend capture, swing trading type of activity. So it's a very large dividend. There could be some very good strategies surrounding this particular stock, but again, I think it's too risky with the stock market. One of the main things you want to do is manage risk, and I think diving into these types of stocks that I would not consider blue chip stocks, I would not consider good buy and hold stocks. If you are unable to get out of this particular trade, I don't think this company would be a good company to hold for the longer term. I was kind of going through some of the graphs here. You can see that over the last few months here, it has performed okay in the last 1 month, but if we take a look at the 3-month graph, it's down 19.03%. 1 year, a very large up and down pattern. At one point up over 55, 56% before pulling back here quite dramatically And over the last 5 years, not a lot of movement here. Up and down pattern here, lots of volatility. Even though it says low volatility here in the middle, this is a very volatile stock and a stock that I would not want to hold for the longer term. So it's a return of capital, which is not good for dividend capture, swing trading types of activity. It also has a very peculiar set of circumstances surrounding that surrounding that special dividend, essentially paying its parent company, giving a return of capital to that parent company, infusing that parent company with cash because it's in some financial trouble. So those are my thoughts on special dividends with regards to swing trading and dividend capture. They're really not that conducive. They're really too risky to jump into for that type of trade. It's better to jump into blue chip companies that you can hold for the longer term if you can't get out of the trade right away. That's why I do a lot of my dividend capture swing trading with stocks like Ford, blue chip stocks that you can hold for the longer term. And if you can't get out of the stock, you can collect the dividend while you wait for a very good swing trade moving forward. And again, these stocks are good buy and hold stocks that could be held for the longer term as well. So those are my thoughts on CYOUChangyu.com, my thoughts on special dividends with regards to dividend capture and swing trading types of strategies. I don't think they're good for that. I think it's better to get into blue chip stocks that have as their dividend a proportion of their net profit, dividends that are sustainable, and then stocks that will essentially rebound in price because they are always producing positive returns moving forward. And really, the price of the stock is simply a reflection of how profitable a company is. Again, I just went over price to earnings ratio in my prior video. Please check that out. That gives a little bit more insight, detail on exactly what I'm talking about with regards to valuation and profitability of a particular company. So that is CYOU. Those are my thoughts on special dividends. Let me know if you agree or disagree with those particular viewpoints. Maybe you have a couple additional viewpoints to add to the discussion. Please let me know. Always interested to hear your guys' thoughts on some of these different types of trading strategies. So not to make the video too long, I guess I'll kind of end it here. Again, if you guys enjoy the video series, if you guys enjoy the content on the channel, feel free to like, share, and subscribe. If you guys have questions about this video, other videos, please let me know in the comment threads down below, and I'll do my best to get back to you guys as quickly as I can. So kind of with that, I'll end the video, and we'll see you guys next time.